Hi, this is Eva from Remax Hallmark, and I'm going to give you a short recap of real estate market analysis, what has happened during this year, and a quick review for December. Being an educated buyer or seller is the key of success, probably in the biggest investment purchase and in your real estate journey. It's 7-time Bank of Canada gave us a holiday present. It's almost unbelievable. At the beginning of this year, we were enjoying almost free money with the interest rate of 0.25%, and now it has been increased to 4.25%, which signals a pause. A keynote speaker at CIBC mentioned if Bank of Canada has to make a decision between recession or inflation, definitely they will pick recession. Let's have a review and better understanding of what is the relationship between interest rate and inflation, how they are related together, and why Bank of Canada is increasing interest rate to control the inflation. As you can see in this picture, when the interest rate is decreased, we are moving towards stronger economic growth, and the result is faster inflation. And on the other side, we have weaker currency. And on the other side, when interest rate increases, we have weaker economic growth and slower inflation. On the other side, stronger currency. So maybe this chart helps a little bit better to understand what Bank of Canada is trying to do to control the inflation. Now let's have a review on what has happened for the inflation rate during the past year, like 2022. This graph shows how the inflation has been increased from January to June, which has been the maximum, and then by raising the interest rate, the inflation came down. So as you can see, January 2022, it has been 5.1%. And again, it went up and up until June, it reached to 8.1%. And then by increasing the rate, it came down 7.67. And the interesting point is that during the months of September and October, inflation rate has been unchanged. Canada's inflation rate unchanged in October at 6.9%. Economists had been expecting the rate to increase due to an uptick in the price of gasoline last month, but instead the data released by Statistics Canada showed the cost of living went up at the same annual pace in October as it was the previous month, which was a good sign. Now let's have a deeper look at what happened that Bank of Canada decided to increase the interest rate. What was the alert? Where was the alert? Let's look at this graph, which is provided by one of the formal resources in Canada. The horizontal line, which we see, is the alert line, which is at 6.5. And before March 2022, still Canada's inflation rate has been less than the alert. And then it went up and up. And then we can say, okay, now we are September and October, which is 6.9. We are getting very close to the alert line. Means we are going down from the alert lines, which is a good sign. Hopefully, let's be waiting for the result of the next month for December when it's announced. Hopefully, we can see it's under the alert line. I want to show you another interesting graph, which was interesting for myself, but it's published from Statistics Canada. And it's based on tradingeconomic.com website. So as you can see in the graph, we have the inflation rate at the highest around July 2022, and from January 2023, it's coming down and down, and they are expecting at July 2023, it would be around 2 point something, around 3, which is amazing. This is a good news. It means probably we are going to have more peaceful time in terms of interest rates, the payments, and buyers and sellers psychologically will be in more comfortable place. Many economists believe that 50% of inflation is due to supply chain issue, which is better but still is not solved yet. We are not sure in January 2023 we will have a hike or pass. Let's see. But let's wait for the result of inflation rate for the month of November. Maybe this gives us more clue what's going to happen. Hopefully it has come down under alert line. If we want to be fair, frankly speaking, overall, adjustment had to be made anyway to real estate market prices, which was too sky and unbelievable. 2023 is predicted to be a traditional year for real estate market. Many banks have created better qualifying options. Many buyers out there have been waiting for the cheapest possible price, and many sellers reluctant to sell, which has caused lower inventory based on the formal statistics of Toronto real estate side, board. And on the other side, the interest rate hike is close to end as the inflation rate has decreased and is passing down the alert line. So probably buyers and sellers are going to be psychologically in a more comfortable zone in 2023. Let's have a look at the inventory plus date of market, which is usually the preliminary signs of the market movement. This image shows the GTA data analysis, which is showing days on the market year over year. So in this graph, 4 consecutive years are compared. Let's say what is compared, it's average days on the market, means how long does it take that a property gets sold in the market. As we can see in 2019, it took 38 days to sell a property. 2020, 30 days, 2021, 14 days, and 2022, 22 days. The red line is showing 2022. And as you can see, 2022 is the second lowest days on the market. This shows the market has been really live in 2022. It has not been the matter that the sky is falling or something very strange happened. No, still days on the market has been lower than 2019 and 2020. 2021 was very exceptional. We had 14 days and this is just the second lowest year. So this shows that really the reality is that we have had an adjustment in the market. To get a little bit more detailed and deeper, we picked York region to compare the days on the market. Let's have a look at the graph. So for York region, as we can see, 2019 days on the market was 29 days, 2020 average days on the market was 25 days, 2021 15 days, 2022 25 days. So still, as you can see, it's not the worst scenario. It still shows it has been a healthy market. Or maybe if you want to say we needed an adjustment for the start of 2022 because it was so hot in the first 3 months, first quarter of 2022. Now we want to talk about the new listings year over year. This is a big factor when we want to have a look at or analyze the market. This is very important to see how many available houses are there in the market. If we have too much inventory, then it may cause decrease in the price. And if we have lack of inventory, then the price may go up because it all is the issue of supply and demand. So this chart is really important to analyze what's happening in the market. New listings year over year. So again, I'm comparing, first of all, I'm going to show you GTA, whole GTA, and then again, I have picked York region for more detailed information, for more detailed study, in fact. As you can see, again, we are comparing 4 consecutive years, 2019, 2020, 2021, 2022. So as you can see, new listings in 2019 has been 3,472, 2020 5,487, 2021 5,005, 2022 3,030. So as you can see, new listings has been very lower than all other 3 years when we compare, which is now maybe you can judge better than me because I explained what does it mean. It means inventory is not that much. So this can be a sign that we don't have enough inventory. And if you look at the immigration case and all buyers who have been waiting to buy at the cheapest price, probably you yourself can judge what may happen in 2023. Again, next chart, I'm going to show you York region, which as you can see, the new listings in 2022 has been only 584, which has been the lowest comparing to the other 4 years. Again, this is showing not enough inventory, even the inventory is lower than the other year. So again, I leave the judgment with yourself. In the last email, now I'm going to show you the average sales price and comparing month to month, which shows increase in the first quarter, decrease second quarter, and then let's have a look what's happening at the end of 2022 based on what we are getting from statistics, which is provided from Toronto Real Estate Board. So here, as you can see, let's have a look at the end of the graph. I'm just going to compare and analyze 2022, which is at the end of this graph. So as you can see, January 2022, we have had a high. The price has been incredibly high. And then in March, April, it has coming down, May down, July, August, wow, it's really down. And then we have had a hike in August, September, and again came down a little bit at the end of September. And after that, as you can see, it's plateauing. Now, you let me know what is your idea. We can see that the prices are plateauing. On the other side, inflation rate has come down. Hopefully, it will be passing down the alert line. Now, let's see what will be the next movement from Bank of Canada. It will be a hike or pass. Let's see. Now, let's get out of all these forecasts and have a real sales snapshot to see what has happened in 2022. It's a real recap. It's interesting. It gives us data about how many percent of the total sale had been condo or has been condo, townhouse, detached or semi-detached. And let's see where has been the most expensive areas in 2022 or which areas have had the most volume of the sales. So if you have a look at the top right corner of this picture, we have a colorful circle which is showing the percentage of different types of the houses. As you can see, the big portion has been detached houses, 44%, which is in blue. And the next big one is condo apartment, 29%, semi-detached, 9%, townhouse, 9%, condo, 8%. Interesting. Still detached houses are being the big portion of the market. Now let's have a look at the left corner, which is showing the volume. Totally 71,230 sales. That has been the volume. Median sales price has been $1,030,000 and average sale price has been 1.2. This is just by estimate. Now let's have a look at the bottom of this picture. If you look at it, we can see that C12 is having the most expensive properties, and next most expensive area is King. And for your information, C12 is intersection of Bayview and Yorkville. And second most expensive is C9, which is Rosedale area. And after that, we are gonna have a look at York region. In terms of volume, we can see that the most activity has been done in Mississauga, Brampton area, and second most activity has been around Vaughan and Markham, Vaughan, Richmond Hill, Markham in terms of volumes. And after that, we can have a look at Pickering, Oshawa, Clarington. Those are the hot spots in terms of volume. So means the most number of transactions have been done in these areas. To me, it seems it has been a very fair adjust for real estate market, and considering what is happening in terms of inflation rate and all interest rate increases and what are the numbers, probably we will have a more reviving market at the late of spring or beginning of Q2 2023. There has been many investors who have invested a lot on the lands to have a lot of new development projects which are who are lobbying with the banks and government to move the project ahead and have the result of their investment. A lot of negotiations is going on. Let's see what will be the result. Stay tuned for our next videos and market updates. I hope you will be enjoying your holidays and Happy New Year.